Hey, hello guys, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily quick stock market analysis show, and we have a big gap update today, especially on the Nifty, and we're heading north. But there is trouble on the Banknifty, where there is heat of resistance is visible, and we have much more to say. And this is for analysis for November 16th, Thursday, tomorrow, 2023. November is an expiry day weekly Nifty. So we have the wrap up here, all the things, but let's just get into the charts first, technical charts. So basically, we will be trying to analyze and understand what happened in the market in the charts, and then trying to plan for a better trade for the upcoming day. So clear gap up. So this is a professional gap. So beautiful gap up. That means there is presence of bulls. Otherwise, when the buying comes in heavily. And the fundamental reason for that is US inflation, core inflation data came in when we had a holiday yesterday. So that boosted the market, and then it had conquered the moving averages, all of them, 20, 100, 250. All the exponential moving averages is now conquered, and market is simply gapped up. But we still have this swing high, which as per the price action, lower low, lower high. That lower high would get breached only if we move above these 19,850. So till then we have trouble. Also, we had a trend line here. So that trend line also was a resistance in addition to the 50 exponential moving average. Both are gone now. One day all taken out. So technically we may be heading towards bull zones back, but anything could happen. It will go, face resistance, hit at 19,850, and then make another swing low. It's possible. Or it could break out of that and continue the rally to much above the 2,200. Anything is possible. It's still not time to say that the bulls have taken it over. It's not happening. Look at Banknifty. Well, Banknifty has formed a red candle, but remember, it also had a beautiful gap up. Clearly conquered the 44 rounding number. Clearly conquered all the exponential moving averages, including the 50 where it was resisting earlier. 100 also, it was resisting below that. Both are taken out in single day. Trendline resistance is taken out. Now once again we have this price action lower high that could come in near the 44,800 zones. If that's taken out, it reaches the channel top, and then 45,000 would be the next hurdle after that. Once 45,000 is taken out, then we can hope for a rally to continue, right? And it gives some more hope if 44,800 is taken out. And while it is gapped up, there is a support gap support that is formed near the 43,990. It says 44,000 is a beautiful gap support as well as a previous swing low plus big rounding number. And if that is breached, then so that's how there is no supports. 43,500 could be a support after that. Then again you can find support at 43,300. Right? Then it can fall to the 42,000. That's how it is. Resistances, these are this. 44,500 for 44,500 first, 44,750, 800 first, second, and then 45,000, and then till the gap of 45,900 it can go up. Nifty didn't say that. Nifty is more important because it's an expiry time. So the beautiful gap can act as support. So 19,500 can be a very good support for tomorrow. And it's moving up. It would come to the top of this channel from where it had started the swing, and there could be resistance at 19,750. Then there will be resistance at 19,850. 850 is a gap resistance, and at the same time also a previous lower low, lower high place. So it's very crucial to clear the 1875, 1850, 18,800, 18,850, 800 is very crucial. This zone is very crucial to be cleared, but let's wait and see whether it will happen tomorrow. But 19,500 is a good support. If that's breached, then you would have a support set the moving averages downside. wherever it is cleared. But primarily after the 19,500 is breached, then you come back to the 19,300, 19,200, 19,000, and then 18,800 likewise supports downside. That's for tomorrow. 95 would act as support, and 18,850 will be act as resistance for the Nifty next pair. Open interest data is also showing bullish with a PCR of 1.16. 19,600 highest put writing seen there as support. Has resistance at 19,800. That's where the data is showing. But some trouble seen here on the Banknifty. In addition to the candlestick pattern that's shown here, it's not bullish enough. PCR is 0.76. It has to go above 1 to be bullish. So here we have maximum put and call writing at one single place, 42,200. Right, correlate that 42,200. Right. So this gap that is formed as 44 can be a very good support. 44 to 44,800 would be the play that may be happening on expiry, right? Within that range if it's moving. But to keep a close watch on them. So that's about it. And the momentum is still not bullish. It's sideways and rising up, almost there. Look at this. Momentum is sideways. It's not climbed above the RSI 60. So if it's climbing above the RSI 60 and staying there, then you can say momentum is in the bull zones on the medium term. It's not happened, so it's still sideways rising, but trend has crossed out of the bull zones. Trend has crossed over to the bull zones. This is beautiful, right? So both Nifty and Nifty trend has been. VIX once again very, very flat. No pull off further down when the market is gained. No spike up when the market falls. So VIX is kind of flattish since very long time, behaving unusual, but still volatility is technically low vol. Intraday volatility of course was there yesterday, not today much, except the gap up that happened. Swiss indices are green, dollar is fallen, crude has fallen, so things look fine. Global Qs have improved, but war and inflation worries, war and this interest rate hike worries and recession worries and all that still there, so that could create black swans anytime. So it pushes across the sector is a very good movement. Almost all of them made 0.70 to 1% plus. Reality made 3% more upside. So the sector that didn't do much is pharma today because it had been supporting the market earlier. But otherwise, pharma, auto, and reality are the three sectors which are the bull zones from the moment perspective in the short term. Right? Keep note of that. So we have three leading players, leading sectors that's driving the market up. So that's always required when the market has to move up. But yeah, there's also has to join in for the market to climb above that resistance on side. So PCR we've already seen, it's contrary. Banknifty is not that bullish enough as the Nifty's levels we've already seen. So investors once again, if there is a slide happening, there's an opportunity to buy SIP mode. There is a different good quality stocks. Traders has to be extremely cautious because even though there is gap up that has happened, Banknifty showing big resistance out there. The price patterns are not turned bullish. Momentum was not yet climbed and settled above RSI 60. So you have to be extremely cautious. That's all I have. So subscribe if you're not subscribed or watching this, and share to friends and colleagues so that it reaches out to maximum people. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.